Tesla Q1 2024 financial results and Q in a webcast. Austin, Texas, April 2, 2024. In the first quarter, we produced over 433,000 vehicles and delivered approximately 387,000 vehicles. We deployed 4053 MW of energy storage products in Q1, the highest quarterly deployment yet. The decline in volumes was partially due to the early phase of the production ramp of the updated Model 3 at our Fremont factory and factory shutdowns resulting from shipping diversions caused by the Red Sea conflict and an arson attack at Gigafactory Berlin. Results. In the latest production and delivery figures released by the company, the Model 3/Y series accounted for the majority of production and deliveries, with 412,376 units produced and 369,783 units delivered. This represents a 2% increase in production and deliveries subject to operating lease accounting. Meanwhile, the production and delivery numbers for other models totaled 20,995 and 17,027, respectively, with a similar 2% increase in units subject to operating lease accounting. In total, the company produced 433,371 vehicles and delivered 386,810 vehicles, with both categories seeing a 2% increase in units subject to operating lease accounting. Tesla will post its financial results for the first quarter of 2024 after market close on Tuesday, April 23, 2024. At that time, Tesla will issue a brief advisory containing the link to the Q1 2024 update, which will be available on Tesla's investor relations website. Tesla management will hold a live question and answer webcast that day at 4:30 p.m. Central Time, 5:30 p.m. Eastern Time, to discuss the company's financial and business results and outlook. Q and a session of webcast. First quarter 2024 Q and a webcast. My name is Martin Vicha, VP of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and several other executives. Our Q1 results were announced at about 3:00 p.m. Central Time in the update deck. We published the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to several risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon Musk, Chief Executive Officer and Product Architect. Thanks, Martin. To recap, in Q1, we navigated several unforeseen challenges as well as the ramp of the updated Model 3 in Fremont. As we all have seen, the EV adoption rate globally is under pressure, and a lot of other auto manufacturers are pulling back on EVs and pursuing plug-in hybrids instead. We believe this is not the right strategy, and electric vehicles will ultimately dominate the market. Despite these challenges, the Tesla team did a great job executing in a tough environment, and energy storage deployments of Megapack, in particular, reached an all-time high in Q1, leading to record profitability for the energy business. And that looks likely to continue to increase in the quarters and years ahead. It will increase. We actually know it will, so significantly faster than the car business as we expected. We also continue to expand our ad training capacity in Q1, more than doubling our training compute sequentially. In terms of the new product roadmap, there's been a lot of talk about our upcoming vehicle line in the past several weeks. We've updated our future vehicle lineup to accelerate the launch of new models ahead of the previously mentioned start of production in the second half of 2025. So we expect it to be more like early 2025, if not late this year. These new vehicles, including more affordable models, will use aspects of the next-generation platform as well as aspects of our current platforms, and we'll be able to produce on the same manufacturing lines as our current vehicle lineup. So it's not contingent upon any new factory or massive new production line. It will be made on our current production lines much more efficiently. And we think this should allow us to get to over 3 million vehicles of capacity when realized to the full extent. Regarding SSD version 12, which is pure AI-based self-driving, you haven't experienced this, I strongly urge you to try it out. It's profound, and the rate of improvement is rapid. And we've now turned that on for all cars with the cameras and inference computer, everything from hardware 3 on in North America. So it's been pushed out to, I think, around 1.8 million vehicles, and we're seeing about half of people use it so far, and that percentage is increasing with each passing week. So we now have over 300 billion miles that have been driven with FSD V12 since the launch of full self-driving supervised self-driving. It's become very clear that the vision-based approach with end-to-end neural networks is the right solution for scalable autonomy. And it's really how humans drive. Our entire road network is designed for biological neural nets and eyes, so naturally cameras and digital neural nets are the solution to our current road system. To make it more accessible, we've reduced the subscription price to $99 a month so it's easy to try out. And as we've announced, we will be showcasing our purpose-built robotaxi or cybercab in August. Yeah, regarding AI computing, over the past few months, we've been actively working on expanding Tesla's core AI infrastructure. For a while there, we were training constrained in our progress. We are, at this point, no longer training constrained, and so we're making rapid progress. We've installed and commissioned, meaning they're working 35,000 H100 computers or GPUs. GPU is the wrong word. They need a new word. Martin Vicha. Thank you very much, and Vamev has comments as well. Vamev Tanega, Chief Financial Officer. It's important to acknowledge what Elon said. From our auto business perspective, we did see a decline in revenues quarter over quarter, and these were primarily because of seasonality, uncertain macroeconomic environment, and other reasons, which Elon had mentioned earlier. Auto margins declined from 18.9% to 18.5%, excluding the impact of Cybertruck. The impact of pricing actions was largely offset by reductions in per-unit costs and the recognition of revenue from autopilot features for certain vehicles in the US that previously did not have that functionality. Additionally, while we did experience higher costs due to the ramp of Model 3 in Fremont and disruptions in Berlin, these costs were largely offset by cost reduction initiatives. If we exclude Cybertruck and Fremont Model 3 ramp costs, the revenue from auto margins improved slightly. Currently, normalized Model I costs per vehicle in Austin and Berlin are already very close to that of Fremont. Our ability to reduce costs without sacrificing quality was due to the amazing efforts of the team in executing Tesla's relentless pursuit of efficiency across the business. We've also witnessed that as other OEMs are pulling back on their investments in EVs, there is an increasing appetite for credits, and that means a steady stream of revenue for us. Seeing others pull back from EVs is not the future we want. We would prefer it if the whole industry went all in. On the demand front, we've undertaken a variety of initiatives, including lowering the price of both the purchase and subscription options for launching extremely attractive leasing specials for the Model 3 in the US. Martin Vicha. Let's start with investor Q&A. The first question is, what is the status of 4680? What is the current output? Lars Moravi, Vice President, Vehicle Engineering. Sure. 4680 production increased about 18%. 20% over from Q4, reaching greater than inaudible for Cybertruck, which is about 7 gigawatt-hours per year as we posted on X. We expect to stay ahead of the Cybertruck ramp with the cell production throughout Q2 as we ramp the third of 4 lines in Phase 1, while maintaining multiple weeks of cell inventory to make sure we're ahead of the ramp. Because we're ramping, COGS continues to drop rapidly week over week, driven by yield improvements throughout the lines and production volume increases. So our goal, and we expect to do this, is to beat the supplier cost of nickel-based cells by the end of the year. Martin Vicha. Thank you. The second question is about Optimus. So what is the current status of Optimus? Are they currently performing any factory tasks? When do you expect to start mass production? Elon Musk, Chief Executive Officer and Product Architect. We can do simple factory tasks, or at least I should say factory tasks in the lab. We do think we will have Optimus in limited production in the natural factory itself, doing useful tasks before the end of this year. And then I think we may be able to sell it externally by the end of next year. These are just guesses. As I've said before, I think Optimus will be more valuable than everything else combined. Because if you've got a sentient humanoid robot that can navigate reality and do tasks at request, there is no meaningful limit to the size of the economy. So that's what's going to happen. And I think Tesla is best positioned by any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. I mean, this perhaps is a point that is worth emphasizing. Tesla's AI inference efficiency is vastly better than any other company. There's no company even close to the inference efficiency of Tesla. We've had to do that because we were constrained by the inference hardware in the car. We didn't have a choice. Do you like it? Kindly give your valuable response in our comment section below, and don't forget to subscribe to our YouTube channel for more interesting and informative